Interest rates and UK property, a deep dive into affordability. Let's be honest, when someone mentions interest rates, most people's eyes glaze over. Boring, right? But here's the kicker. Interest rates can literally make or break your chances of buying that dream home in Surrey. Croydon. Been there, seen that. And yes, I've had first-time buyers crying in the office because their mortgage payments jumped £400 overnight. Brutal. So, what's going on with interest rates right now? Well, the Bank of England's been playing seesaw with the base rate since inflation shot through the roof post-COVID. We're hovering around 5.25% at the time I'm writing this. That's a world away from the 0.1% sweet spot we had in 2021. And what does that mean for property buyers? One word: affordability. Or rather, lack of it. Here's a little story for you. Just last year, we found them a 2-bed terrace for $315K. Lovely place, great garden, close to the station. We calculated their mortgage repayments in March 2023 when the rate was about 4.5%. Fast forward 3 months, rates hit 5.75%, and suddenly they couldn't even get the loan approved. Why? Because their monthly repayments jumped from £1,400 to £1,800, just like that. And the lender pulled their agreement in principle. Ouch. Let's break this down a bit. The rise in interest rates affects mortgage affordability checks. Lenders now stress test buyers at 6 to 8% interest levels. That kills your borrowing power, especially if you've got childcare costs or student loans hanging around. Monthly repayments. Obvious but terrifying. A 1% increase on a $250K mortgage over 25 years could mean paying an extra £150 to £200 a month. That's your council tax right there. Property demand. With fewer people able to borrow big, demand softens. We've already seen asking prices drop 3.5% on average since late 2023, according to Rightmove data. Landlords. This is a whole separate drama. Buy-to-let mortgage rates are now over 6%. Many landlords are selling up because the rent doesn't cover the mortgage anymore. And Section 21 abolition isn't helping their nerves either. But wait, does that mean it's all doom and gloom? Not quite. The market's shifting, sure, but savvy buyers can still win. I've had a few chain-free cash buyers snag properties in Southeast London at 10 to 15% below asking. Why? Because sellers are panicking, especially if they've already committed to their onward purchase. And here's something wild. Some lenders are now introducing 40-year mortgages to offset the high rates. It's a gamble. You'll pay a fortune in interest, but for some buyers, it's the only route in. Would I recommend it? Depends. I've seen it work for single professionals with stable careers and no dependents. But for a family of 5 with childcare costs, think twice. Honestly, this whole landscape is changing by the month. Buyers are smarter now. They're asking better questions, getting brokers involved earlier, and being more realistic with budgets. Finally, after years of watching people stretch their finances to breaking point just to live near a good brunch spot. So, what should you do if you're looking to buy right now? Here's the real talk. Get a broker who knows their stuff. Not just a bank advisor. You want someone who can hunt the whole market and explain product transfers, trackers, fixes, and all that jazz. Stress test your own budget. Can you still pay the mortgage if rates go up another 1%? If not, you're overreaching. Consider waiting if your current rent is manageable and your deposit isn't quite there yet. Prices might dip a bit more in the next 6 to 12 months. Or go for it if you've got a long-term view and can bag a deal. Negotiate hard. Buyers finally have leverage again. And I've seen offers accepted $25K below asking just last week. One last thing. Don't get too emotional about interest rates. They're a cycle. I've been in this industry over 20 years, and I've seen 0.5% rates and 7% rates. Markets adapt, people adjust, and property still sells. Just make sure you're not the one holding the bag when things shift again. All right, rant over. Go check your mortgage calculator, and maybe pour yourself a strong coffee while you're at it.